please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters. Well, this is the show where we'll highlight all the buzzing stocks of the day. Yesterday, we ended virtually at the low point of the day. This morning, good to see the bulls fight back. The Nifty is holding with a gain of close to around 40 points. And importantly, the rupee as well has bounced back a tad bit, holding at around 72.5 odd. So bounce back in the equity markets and a bit of a fight being put in, even in the currency space. So pretty good going. The bulls, they'll be looking at around that 11,200, 11,250 odd mark and trying to defend that level. Here, Rima, markets are looking good. And on Chartbusters today, our director, Yash, it's his birthday. So Yash is wishing you a very, very happy birthday. And great that you're part of this team as well.
Yes, absolutely. And all the best. Wish you, many happy returns of the day from everyone from the Chartbusters team. But, back to the markets, compared to 3 p.m. yesterday, at that time, crude was hovering close to $80 per barrel. Now we're closer to 79. The rupee is appreciated. And even the global equity markets have put in a rally, not just in US, but if you pull up the Asian market picture as well, you've seen a rally coming through in the, the Nikkei market on the back of Bank of Japan remaining pat on their interest rates. The economic policy continues to remain stable. Hang Seng has put in a 260-point rally. So compared to 3 p.m. last night, yesterday, when the slide started in the equity markets, today, at least on the macro factors and on the global equity front, the parameters appear to be better. And actually, as we speak, there is such a big up move in the market.
Absolutely, Rima. And, I don't know whether there's a big move in crude prices or there's some change in terms of policy, but HPCL, BPCL and IOC, massive volumes on all those three stocks. They have moved to the high point of the day. Just pull up the intraday chart out there. All those stocks are moving well. Titan, that stock was down close to 3% at the start of trade. That as well has moved higher. And the sense you got, Rima, at the end of yesterday was that, in fact, though the Nifty ended at the low point of the day, the premium on the Nifty futures, that didn't contract. So that was one factor. At the end of the day, we learned that the FIs, they bought 10,000 long contracts on the index futures, telling you there were some contra-long positions that were taken. Now that we're holding with a gain of around 50 points, it'll be interesting to see whether or not we see some unbinding of those positions, or in fact, there are more long positions being taken, more amount of put writing as well. If we can pull up a strike, 11,300 put, that's the most active today. So just keep an eye out on that mark. Close to around 4.5 lakh shares being added out there. Premium of around 60 rupees, telling you the 11,250, 11,240. That's a very, very crucial mark for the bulls, and they'll be looking to defend that mark. 11,300 put, that's the level that we're talking about. But let's kickstart the show with the top stories.
Yes, absolutely. So let's take it away to Titan, which is among the top Nifty losers, though as we speak, that too is staging a bit of a recovery. CLSA has downgraded the stock to a sell, lowered the target price to 720.
And asset management companies are real under pressure after SEBI announces a cut in total expense ratio for mutual funds. CLSA says the cut could lead to a 15 to around 25 basis points reduction in equity fees.
Sun Pharma gets a boost as the dermatology medicine gets an approval in Europe. Rollout of medication in Europe will start in the next 2 weeks.
And sugar stocks surge in trade. Sources say that the cabinet may approve a subsidy on sugar exports. The proposal is to give a subsidy on exports of around 50 lakh tons of sugar at a price of 13.88 per quintal.
Rights Gains in Trade receives an additional turnkey contract worth 436 crore rupees from the Indian Railways.
Okay, Bank of Baroda is bouncing back in today's trading session. It was down 15% yesterday. Today, from the low point of the day, it's bounced back and it's holding with a gain of around, that 3.5–4% odd. But as I said earlier, 11,300 put. Keep an eye out on that mark. If you see more addition from here, telling you the bulls, they believe they can defend that. If you see some unwinding of those positions, that'll be telling you that they're getting a little bit nervous. So the 11,300 put, great work by the birthday boy Yash. They're seeing a lot of addition in today's trading session. How do you trade the Nifty though from here? Is this a shorting opportunity, this bounce that we're seeing? Or in fact, could we see a bit of a short squeeze and the market's moving higher? Ashwini Gujral's with us. Hi Ashwini, good morning. What's the trade on the Nifty?
Well, as long as the rupee keeps appreciating, crude remains in control, I think the market is poised for some short covering. And the interesting thing is that stocks which got beat up yesterday, Bank of Baroda, Axis Bank, Canara Bank, they are showing some amount of action on the upside. And plus, you have metals which is performing. Overall, today looks like a day when, bulls are taking it off. But I think 11,350, 370 will be difficult levels to get beyond. The bank nifty had a particularly severe fall, so maybe 26, 680, 700. That seems like be a place where this rally could go. But still, you shouldn't get all bullish and gung ho, because this remains a bit of a pullback rally for the moment. Only if we start crossing, say, 11,400 for the moment, would you think that the worst is over and we should be moving up from here. For the moment, you should probably play only for a recovery. Having said that, TCS is a buy with a stop of 2070, target of 2120. Tata Steel is a buy with a stop of 620, target of 638. And Bank of Baroda is a buy with a stop of 114, target of 122.
Okay, thank you very much for that. And I just spoke about how oil marketing companies are staging a bit of a comeback. Two other pockets which are moving higher. One is power. So you've got NTPC in the large cap space. In the mid cap space, you've got Torrent Power, Adani Power also inching higher. So the intraday should be up for you on your screen. In fact, Tata Power too is higher by close to about 3% odd. So mid caps and large caps in the power space are looking quite good. And apart from that, paper stocks. So JK Paper is now locked in an upper circuit of close to about 10%, while Orient Paper and Industries too is up nearly about 5%. So in the broader markets, that space too is seeing some amount of interest. Some news coming in on Punj Lloyd. The stock is reacting positively. This is with respect to insolvency proceedings which were initiated against Punj Lloyd, and now that case has been deferred to the 19th of November. We'll get you some market opinion now. Earlier we spoke to Sunil Garg, the head of international equity research at JP Morgan, from the sidelines of their India Investor Summit currently underway in New Delhi, and the performance of emerging markets as well as the outlook for the Indian markets.
We've lowered our estimates in terms of target price for MSCI Emerging Market Index and also some of the EPS numbers. But the fact remains that emerging markets are very cheap, and in fact they're trading at a much wider discount to historical averages, and that at least provides a value floor in emerging markets. So overall we are positive. I think the big driver here, it's going to be China, because China has been a massive underperformer. So it's not just some of the Latin American currencies that have been weak, but it's China's equity market that has been dragging down EM performance. We've had a very strong performance from here. I think in terms of where our Nifty targets are, it's probably a relatively modest upside at this point in time. If you look at some of the high frequency data points coming through, whether it's PMI, whether it's rainfall, whether it's the pressures from oil prices, I think these are going to be acting as headwinds, and we think the consensus earnings estimates are probably a bit too rich. They're about somewhere between 21 and 25% for either MSCI India or Nifty, and we think it's going to be closer to 15%. We actually think that higher bond yields are a sign of confidence, and typically, historically, and particularly in developed markets, they've been associated with better equity markets rather than the other way around. Overall, emerging market positioning at the moment is light, and I think India is, as I again mentioned earlier, has been one of the stronger outperformers. So there's clearly a possibility that as investors get more comfortable with emerging markets, it rotates into markets that have massively underperformed.
Well, keep an eye out on some of these paper stocks. Rima was just telling us that, in fact, some of those stocks are moving higher. JK Paper, you have Orient Paper as well that are moving higher. A couple of factors playing out. One is the ban on plastics. Second factor is that, in fact, there are production cuts in China. So that's what's helping domestic paper companies. And not just that, I was reading an article. The domestic AMCs, they have increased their exposure to paper companies on the whole. And that's what's leading, the street to get very, very buoyant in terms of these companies. They've all moved to the high point of the day. But let's address that news on Punj Lloyd. Ashmit Kumar joins in to fill us in with that news. Ashmit.
Well, it's the Delhi High Court essentially reiterating the orders of the Apex Court that there needs to be a status quo, but towards that end, spelling it out in as many words. As far as Punj Lloyd is concerned, no IBC proceedings can be sought to be initiated against them. As far as they're concerned, there is a status quo that has been clearly spelled out now by the Delhi High Court with respect to any potential IBC proceedings against the company. Now, keep in mind a couple of facts. First, the Apex Court just earlier this month had in fact passed orders whereby they had passed a stay order on the February 12th RBI circular. The RBI circular was the one that had given a 180-day window to banks to settle stressed assets, or else had given them directions to move them to the NCLT under IBC. Now, since that had been stayed, the Delhi High Court here observed that the Supreme Court has already seized the matter, and hence it wouldn't be appropriate for the Delhi High Court to pass any further orders except to reiterate the status quo. So to that end, definite relief coming in for Punj Lloyd. No IBC proceedings can be initiated against them. Of course, as far as why they were here before the Delhi High Court, that's because ICICI Bank, acting under the February 12th circular, had been contemplating possible IBC proceedings. So towards that end, some clarity coming in for Punj Lloyd. But of course, the final word will have to be had by the Apex Court when the hearing resumes later this month. Back to you.
The company which is on our radar right now is Waterbase. If you pull up the performance of the stock in the last 3 days, you can see higher volumes as well as increased traction. In fact, this week itself, the stock has seen a rally of close to about 15%, and this is on the back of promoter hiking stake in the company. Ramakant Viyakula, the CEO of the company, joins in now. Mr. Kula, if you could tell us, so far in the quarter, in July, August, as well as half of September, by how much of the promoters hike stake in the company, and are you aware of their plans to hike some more, buy some more stake?
I mean, this information I would rather leave it to the promoter to answer. And to my knowledge, it's about 50,000 shares have been bought in the last 3 days. So the stake would have gone up by at least 0.2-0.25% in this quarter.
Okay.
All right. Is business looking positive? Your first quarter was good. You saw a revenue growth of around 20% approximately. For the year, you saw a revenue growth of around 20% approximately. For the year, what kind of revenue are we looking at? And importantly, what is your capacity utilization? What was it last year? What is it as we speak?
Yeah, last year the utilization was around 50%, and this year we are looking at utilization rate of 60%.
Okay.
And on the top line front, we have grown by about 21% in Q1, but Q2, due to farming conditions not being favorable and the farm gate prices during the first half was not favorable to the farmers, so the stocking densities were reduced. But overall, we would like to achieve at least a growth rate of 15% this year.
15% for the year. All right.
Yeah.
If you could give us a few details, what is the current, shrimp feed on a per kg basis, and also take us through input cost, soya, fish meal, as well as wheat flour. How are they shaping up?
Yeah, the sales realization is around 70-71 rupees per kg, which has been consistent last 1.5 years or even 2 years.
Okay.
But the input costs have risen this year, beginning this January in this calendar year. We have seen a surge in the prices of soya, which was hovering around 31 rupees during entire last year. This year we have witnessed 35, 36, which is currently at 34, 35.
Soya?
So soya has appreciated a lot, almost 13-14%. Fish meal last year largely it was around 80 rupees, and this year we are seeing fish meal prices which surged to 87 are now back to normal. I mean around 82, 83 are the prices right now. Wheat flour is the main concern right now. Last year wheat flour was around 22.6 per kg, which is now hovering around 27.2. It's increased by almost 20% now. So these three are the main key ingredients for the feed business.
True. So Mr. Kula, the question that we're trying to understand, we're trying to get to the point is you're expecting a good top line growth, but margins, where should they stabilize at? I'm looking at your first quarter, you delivered around 16.5 to 17%. For the year, what kind of a sustainable margin can we look at?
I mean, looking at this raw material situation right now, I can say that this year we are looking at a margin of around 13%.
13%? Oh.
Okay.
Yeah. And in absolute numbers, on the margin front, it would be flattish, largely on account of the raw material cost. Otherwise, top line is growing around 15%, as I mentioned.
Okay. You're predominantly into shrimp feed. What percentage of your revenues come in from exports at all? And how is that market shaping up for the industry?
Our feed contribute almost 92 to 93% of our total revenues. Exports this year had been, in the beginning of the year, we have seen the demand was a bit soft, largely on account of huge inventory in the U.S., which is now eased out and we see orders pouring in.
Yeah.
But question right now is the material availability for the processors is a big question because most of the farmers have reduced their stocking due to the lower farm gate prices.
Okay.
But the situation right now is the farm gate prices have come back to normal and are moving up steadily. Export orders are also pouring in.
Yeah.
So whatever drop in exports we would have witnessed, we should make it up in this next 6 months.
So the short point that you're making is that the rupee depreciation will have no impact on you because your exports are very small. Is that correct?
Correct.
And what about imports? Are you all importing any of these raw materials?
Some feed ingredients we do import. The total value of such imports will be about 6 to 7% in our raw material cost.
All right.
So yes, that would get impacted.
All right. So
If you could tell us, what is the company's balance sheet position like, your cash and debt?
Right now, I don't have the details right now. So maybe I can share the details later.
Okay.
all right. Just a final question, sir, before we let you go. There was some virus in China, that was affecting shrimps. If you could tell us, does that impact your business and how does it impact your business? We're aware that you are selling shrimp feed, but there is some virus that's there in shrimp.
These are too early reports, which needs to be validated. We do hear about a new disease called SHIV, which is breaking out in China. China, as said, the production in China has come down in the last few years. They were doing over 1 million tons of shrimp, say 3-4 years back. Now it's come down to 600,000. And if the production in China gets impacted, it's good news for India because Indian shrimps will fly to China. So that's good news for Indian processors. For the feed business, it doesn't make any impact because we don't export any feed to other countries.
The Defense Acquisition Council, or the DAC, approving procurement of Akash weapon systems worth around 9,000 crore rupees. To discuss this and more, we're joined by Mr. Bhaskar, the CMD of the company. Hi, sir. Thanks so much for joining in. Well, give us some details on this. 9,000 crores is what the DAC has approved of Akash weapon system. How much of that will you all get? And by when will that order come about in this fiscal year?
Thank you for giving me this opportunity. Basically, these two regiments, Akash, is an upgraded version of the current already supplies of Akash. And this particular upgraded version, at the outset, I would like to thank the Honorable RM and the MOD, DRDO for giving and services particularly to keep this trust in BDL, and definitely we would ensure that it will be executed as per the requirements of the services.
Okay,
Right, so
Mr.
And we are
Bhaskar,
already gearing up for that.
okay. If you could tell us, will you execute the entire order of 9,000 crore rupees or only a portion of it?
It will be executed totally. This order is, BDL is the lead integrator for this. BDL is the lead integrator for supplies to Army.
Okay.
And BDL ensures that not only the missiles are made and all the ground systems are all being also taken together, supplied to the services and assured the system.
So the entire 9,000 crore order comes to BDL?
Yes.
And it will be executed over how many years?
It is expected to be executed over 2 to 3 years maximum.
Okay. Mr. Bhaskar, the RFP, or the request for proposal, has not been floated yet, right? When do you expect that to come through?
Yeah. Yeah, I think it will immediately follow because full clarity is there on the whole proposal. That's how the currently DAC approved it. And so we expect it to be, we are very confident that the proposal, the RFP and then subsequent process of contracting all would happen in very short periods.
Okay. By when do these revenues start flowing in? From FY20 onwards? How much of it, or how much of these 9,000 crores will be accounted for?
Actually, it can be more appropriate to assume it from 2021 onwards.
Okay.
And but however, we would put every effort to see that some portion of it gets even into the next year's execution.
Okay. Mr. Bhaskar, 9,000 crore rupees is a very large order. I understand that you are the lead manufacturer as well as supplier of these Akash missiles. But will you need to outsource some portion of this particular order to some other suppliers? You know, because 9,000 crore rupees is a very large amount, and your order book last time around was just 11,000 crore rupees. When we had indicated, you said that you expect order inflows of close to 2,000 crore rupees for the full year. Now we're talking about 9,000 crore rupees.
Yeah. So, hello? Yeah, basically the order is going to be executed. We have a model of outsourcing and in-house manufacturing put together.
Okay.
Our outsourcing content would be to the levels of somewhere around 70%, and the most of the rest of the manufacturing will be predominantly in-house, and the supply chain system has been well established. And I think we would be able to execute because of this synergy between private industry, other public sectors like BEL and all. That's how we will be able to execute it in time.
All right, Mr. Bhaskar, you know, a lot of investors that put in money in the IPO, they're still waiting to make some money. Yeah. Now, in terms of profitability, what kind of margins should they look at? Point number one. And point number two, what is the cash in the books currently and how will you use it?
Basically, the profitabilities, we are very confident we will be able to sustain.
Margins?
And the last couple of years revenues, the way we have been progressing, I think the more or less similar revenues we will be able to progress.
What about margins,
course, in spite of there is a revision in the government's, margins will be to the levels of around 14, EBITDA around 14, we are operating at currently. I think we would sustain that, definitely.
Okay. Let me come back to that point. You said 70% will be outsourced and 30% will be in-house. So on the outsourced portion, how much will you be making in terms of margins or in terms of revenues? Because you will have to shell out something to your partner.
Not exactly. We'll be able to distinguish in that way.
Okay.
And see, I can only one thing very clearly say that more and more manufacturing, definitely it would be more and more advantageous to BDL. And we have the trading portions normally is very less in that way. And most of the portion has been manufacturing portion only.